Okay, the meeting of the Finance Committee for October 19th will come to order. And we have no public comment to offer. In regards to our agenda for today, we need to have an executive session. So I would like to have a motion to entertain and a vote, please.
Do that first or last?
Well, to amend our agenda.
Okay. All right, I will make a motion to amend the agenda to include an executive session.
Okay, any discussion?
No.
Okay, all in favor? Okay, agenda is amended.
Do we need to stay before, Charlie?
We will when we go into executive session.
Okay, for the purpose of the meeting, we don't need to.
When we vote to go into executive session, we'll stay.
Okay, so item one, approval is minutes for the last meeting. Wait a minute. Sorry, I'm looking at something else. I'm distracted.
Yeah, we got a typo.
Yeah.
I'll make a motion to approve the minutes from the previous meeting.
October 19th.
I'll take the motion on the floor here.
Okay. Any discussion or corrections? Hearing none. All those in favor? And one abstention. Thank you. Item two is workers' comp insurance renewal. And with that, is it Jarrett?
Me?
You're up to bat.
I like hitting in the leadoff hole. Not kidding. Well, it's good to be with you guys. We have been involved as the broker on the workers' comp program since the inception of the joint water sewer. And kind of a quick summary of the last years of relationships is we had been with Zenith for about 11 years as the carrier, and we made a transition last year to National Fire and Liability, National Liability and Fire Company. And really, this year has been a great year in regards to performance. We made the right decision last year because when we left Zenith, the losses had not come to fruition. But we currently, that last year with Zenith, have over $600,000 worth of work comp losses. And we'll kind of talk a little bit about that. But that's important to know because the experience mod factor, which really has a correlation in the pricing, is now picking up that year. So it's moving from a 1.09 to a 1.39. So our cost structure theoretically should move 30% north if all things are the same because of the change in the experience model. Okay. So if you look at it, the premium dollars in 2022 that were spent was $202,382, and our renewal that we've already got from National Liability and Fire is $224,439. So it's a variance of $21,957. Now, I'll make a note in a minute. You'll see an analysis. That number's a little bit different. This is the true cost of this year's program, and our payroll exposures that we're using going forward are a little bit lower. So in all actuality, it's probably, if you said, Jarrett, toe-to-toe, apples to apples, it's a 15% increase. And I'll show you all that in a minute. But this is directly related to this 30-point increase in our model. So what did we do? We went back to National Liability and Fire and said, hey, we've had a great year, first year with you. We're looking for long-term relationships and partners. And we were able to negotiate some scheduled credit on this year's renewal. So we got 10%, which I think was a really good deal. It's $29,000 of credit applied. And you'll see it kind of on this sheet down in the quote area. I don't know if I can slide this down or I'm not the most. So you'll see right around here, that $29,000 number is where you can see that we got credit applied. So this offering, if everything stayed consistent to last year, it really should be an increase of over $50,000, $60,000, right? So keep that in mind as we go through this. So we were excited. They have been great. The gentleman that we use for this partnership also works with y'all on the other side with Fred McGinney, and he is involved with the broker on that side, so he's very familiar with joint water sewer. This year alone, we've had maybe $12,000, $13,000 in losses. So we've had a great year, and I say that because we still got, a month to go. So we feel good about having renewal numbers in at this moment from this carrier, and then them working with us and giving us some schedule credit. This next page, make sure I got this right, yep. So this gives you a little bit more detail, and I'm glad it's up here because I'm sorry it's so small. But this is an analysis using our payrolls at 2023. So these are our one projection, 7.3 million in payrolls for this 2023 term. And what I did is I went back and I applied it to our final net rates of each of the historical years. So really for y'all, I want you to get an idea of where we kind of compare to the past. So you can kind of see line by line the total premiums that would have been developed. In 17 was 272, 18 was 311, 19 was 243, and it goes all the way down to 224. So this is kind of an apples to apples historical comparison using these 2023 payroll amounts. It shows you the variance from year to year. So you can see kind of the ebb and flow of the premium structures that we paid. Obviously we were with Zenith up till this current year we're in now. This would be what we're going into after January 1. So you see percentage changes. So what I said earlier is the true number, if you ask me, hey, what is exactly going on with our rates from the term we're in now to the term we're going into, it's basically a $29,389 increase, 15.808%. Now, why is it different than the first page? Well, these payrolls are lower than we have on the current term. Does that make sense? It's kind of the way my brain works. This is the way I look at it. The other thing to note is our historical experience mods, because these do factor directly into the cost structure. So 0.99 in 17, 1.12, 0.96, 1.27, 108, 109, and now 139. Our losses also track with those years. So you can kind of see here how we've performed, and you see this big number of 677, $566. So that was the loss performance in 21 and 22. The last year we left Zenith, and we made a smart move because they would be running us off, and it would be hard for us to be attractive in the insurance market if we were dealing with that year here, okay? So the claims numbers are referenced below, but some stats that I wanted to point out is in 2023, this 1.39 mod is our highest mod that we've had in the past 7 years in a 7-year look. And the 2023 pricing is lower, even with this higher mod, in 17, 18, 19, and 20. The only years that it's cheaper is 21 and 22, and that's because the experience mod is roughly 30 points lower. So for me, I like to kind of know where you're at historically, see how we're performing, et cetera. I know this is a busy worksheet, but does it make sense to y'all?
I can follow it just
Yep.
fine.
Yeah,
Questions
no, it's
about it?
fine, yep.
So that's kind of the historical pricing there. And if we look on my last page, which I know is really is important, is performance. So this is dating back to the inception of the JWSC. First year we were in business with the carrier was FCCI. We had 369,000 losses. We had a big one maybe 2 months in. A gentleman had a bad injury to a leg. And back then we had only 3.2 million in payroll, and it justified right at 85,000 in premium. So you can kind of see the loss ratio is important. In the insurance business, if the loss ratio is 60% or more, typically the insurance company is not making a profit. They've got about 40% in there for their overhead expenses. And the loss ratio is losses divided by premium. So if you look up here, rough year, great year, rough year, it lost money, and then this year's the big year. And that's 21 to 22. So for me, it just shows kind of the cost structures we paid in, the performance, and then our mod history. And our best mod ever was 2013, 2014.
How is mod calculated?
So mod is calculated with 3 years of your loss performance with a 1-year buffer. So our experience mod going into the new year is looking at 19, 20, 2021, and 2022. So it's snapshotting these years, okay? The current one we have now is snapshotting those years. So Jared, why did it go up 30 points? Well, we lost the 174 year, and we pick up the 677.
What is it? I mean, is it what's the numerator and denominator? How do you get to that? How is it actually calculated?
Well, it is a very busy worksheet with multiple, I mean, I can on the side session show you how to come up with it, but it's pretty,
What is, I mean, it looks like it's
Two
based
key-
around, it
two
looks like
key-
it's based around one, so
Yeah.
like one national average or something?
yeah, so one, I would say one is viewed as, average.
So
In
we're below
industry.
one then.
Industry
Industry.
average, and, you know, a lot of industrial sectors, large commercial businesses don't allow subcontractors in if you have a mod over a one. It's kind of your barometer for your safety temperature.
So one is normal, and then,
I would say you would shoot for normal to be a 0.85 or those numbers well below. It is mainly calculated on the losses that are put in the formula and then the payroll generated. So if the joint water sewer had 35 million in payroll, a lost year of 600,000 is absorbed easier than somebody with 7 million.
so one of those numbers up there, and it might just be for reference, it might not be built into calculation, one of those is off by a factor of 10, so does that affect the, or assume it is,
Do what now?
the payroll for 19 and 20?
Yeah.
Yeah, so that just gives you a gauge. That is off, you're right, that was
But I
7
mean,
million.
But I mean, that doesn't factor into the calculation, though. That number, that 766,000.
No, that's a clerical error on my
Okay,
end.
okay, I apologize.
You can grade me as an average on that.
No. Make sure
No,
that
but-
wasn't a number that was input. into
No.
the spreadsheet.
And this is data that we took off the mod worksheet and put on it.
I got you.
But yeah, so I mean, you know, going forward in the future, we know that in 2023, it's taking a snapshot of those years. And actually, we're blessed this year because when the mod information was pulled from the workers' comp carrier, they pull it about 6 months prior. They send in a report, has nothing to do with the JWSC, our firm, nobody. The carrier submitted, that number was around 510. So there's been activity in 6 months on claims driving it up. So we know that the next year, in 2024, it's gonna view this. So this guy rides with us for the next 3 years, that year of history. And it stinks, I mean, it was a rough year. In a minute, we'll talk about those actual claims, just getting in some general specifics on them. So if you ask me, hey, statistically, what kind of trends are we performing at? Well, we can think that we're gonna probably pull about 14.5 claims a year as average. This year, we're at 12, but man, that number looks pretty good, right? That number may have changed. That data's we pulled it in October. So if we have 2 catastrophic losses before 12/31, December 31st, that number could change, right? This is skewed, obviously with a big number, but historically, $152,000 of losses a year. Historical premium, 226. That's kind of where the renewal's at 224. So we historically have had a 67% loss ratio.
So basically, we're spending, including the risk management, which is the premium, and then the actual cost, about $380,000 a year based on our safety performance. And if we had a better safety performance, our loss premium would be significantly less. Because if you go through an X mod of 3 years and you're doing 3 years of
Penalty
very good,
payments. Yeah, if you look at it as, if you had a 1.0 mod, if you look at the,
well, we ought to get to 0.85 like you suggested. If
yeah.
we did that 3 years in a row, our premiums would be remarkably less.
well, look at this. The experienced mod of 1.39 cost the JW $82,000 in this current renewal term. And again, we are trying to offset it by, we negotiated some credit on good performance to drive down 29 grand of it, trying to triage it.
I can appreciate what you're doing as a broker. I like what you're doing. I think that's good. The point I'm making is that our performance in safety is not where it needs to be. And if we get it there for 3 years where it needs to be, then our cost will go down
Yes.
and the lost payments will go down because we hurt people less.
Right.
Or we crash less vehicles, et cetera. So
I view this, if, let's just say that number's on your policy for 3 years, that's 240,000-ish dollars of lost profit or money to reinvest in other programs within this,
right.
commission. Yes.
So what, you don't mind go back one slide, or want to go up one, however it's set up?
You want this one with the losses?
Yep.
Yep.
Educate me, if you will. When is an auto accident workers' comp versus when is it auto premium?
Great question. So Single car accident, we're not at fault, that's on us, right? Nobody hit us. In this scenario here,
But would our auto carrier premium not?
no,
always work.
if a guy's in a vehicle and getting injured on the scope of work, it's typically, it's gonna be a workers' comp claim, and then you're hoping that at-fault party's involved, so then we can subrogate against their limits.
Okay.
But the sheer fact is, in the state of Georgia, the state minimum limits for most vehicles driving around is $25,050, which won't even buy a brand new truck. And that's where it frustrates workers' comp, because let's say this person only has 25,000 limits, that's all we can go get for an $85,000 injury, and they ruined our truck. It's just a problem. But the state of Georgia won't raise it because they don't think citizens will pay to have higher insurance limits, and it affects everybody. Yeah.
So those are auto incidents that there's a separate claim somewhere for the vehicle itself. That's just the workers' comp piece.
Yeah, and so it could be twofold. I mean, we could be in an auto accident where we hit a third party and there's auto liability involved, that we damage some bodily injury or ruin somebody's property, and then our guy's involved on workers' comp. Yeah. So this is the 21 large claims, so you can kind of see, I didn't want to be too specific, obviously, for privacy
Sure,
reasons,
right.
but you can see the month when it occurred, roughly the generic incident exposure and the number. So, this thing's being driven by two claims: single car accident, August 11th, 5/11, 3 months prior, lower back injury from shoveling dirt.
And sorry I'm getting too far in the weeds, but
No.
are those dollar amounts, are those, I'm gonna ask A, B, or both, but are those actual injuries that we pay for, or those lost wages, or are they both?
So this number here is holistically including what's been spent already, and then what the estimated reserve amount is for this typical injury.
But is there any lost wages?
It will include medical and lost wages and expenses. The medical and the lost wages get thrown into the experience mod calculation, but if there's 20 grand illegal on it, it does not affect your experience mod.
Yeah, but to your point, if somebody had an auto accident, was out for 4 months, all their wages go into that.
The wages going down.
Indemnity's being paid by workers' comp for that guy, even if he's not at fault, and that's what's.
So what, and I'm just asking because I don't know as much about this, so I'm just sitting here, listening to your presentation, asking questions. But at what point should some of that be self-insured? I mean, the lost wages, for example. I mean, do we,
It's a gamble. I mean, indemnity, I'll
I
tell
see
you.
the insurance and the lost wages is.
And I don't want to get too confusing, but the experience mod worksheet views an indemnity claim, which lost wages are involved, or a medical claim, medical only, okay? The medical only claim in the experience mod formula, if this is a medical only claim, which it's not because of the number, but if it was, meaning the guy is either being paid for being out by y'all, or he didn't miss any time of work, and he just had a medical deal, that number, when it's thrown in the calculation, is discounted by 70%. NCCI, who develops the mods and is responsible for it, they want to reward business owners for having medical-only claims, because holistically, they're cheaper. The indemnity claims are the ones that explode, and legal gets involved in all those components. So, yeah, I mean, you could say, hey, we'll pay Jimmy, who fell from the truck, we'll pay his lost wages for 6 months, and think all it's fine and dandy, and then the doctor give him an impairment rating for a broken arm, and then it goes into indemnity, and now it's taking the full number on our mod worksheet, it's backfired.
I'm just curious how big an organization we have to be before we look at having an administrative program that we're self-insured on.
Yeah.
Now I'm asking because we don't know.
Yeah, I mean, right now, the biggest deductible available in our program is $2,500, right? You could look at large deductible programs, but I'm concerned that, I mean, if we had a $500,000 deductible in this year, boy, y'all lost a lot of money, plus the premium.
But
So
looking
it's
back
kinda-
to where we, had some 12 and 13% years too, though.
Now, you made the statement that XMod ought to be an average of 0.85.
No, sir, I said that the average is 1.00, but best in class are under it. Right?
Okay.
Then they call that a credit mod. I've had clients that have had 2.2 mods, it's bad, right? But I've had some that have 0.70 mods with exceptional history, and they're getting a 30% credit versus the $82,000 penalty, basically. I hate to say it that way, but it's just what you said, Mr. Duncan. I mean, that's how it's gotta be viewed.
Right.
Is
Yeah.
and when you're trying to change the culture, that number typically, you hope drives the momentum that we know that we have $82,000. Now, things may happen, et cetera, but we know in this term that $82,000 of your premium per se is being spent because of the performance of the past that hadn't gone favorable.
And this might be a question more for you, Andrew, than, you know, Treasurer, but when we have these team members that have lost wages and they can't perform their normal responsibility, are we bringing them back to do something?
It depends on if they're released from the doctor. If their doctor releases them for light duty, then yes,
Yep.
they're brought back, put on light duty. Typically, they're doing paperwork type activities.
Clerical driven stuff, but the light duty tool is great because you have some organizations or businesses that don't want any part of it, but that's accountability, and if you've got somebody injured that may be trying to take advantage, and I'm not saying that happens.
Sure, yeah.
But when it does, it's a way to hold them accountable, and they come and they're at work every day, and historically, they heal faster and get back to work full duty quicker than the person that's at home watching Price is Right.
That's right. Yeah, absolutely. And is that, and that's why I was asking really about that lost wages, whether we should just be funding that out of operations instead of out of insurance claim, but it sounds like that's no.
So we do bring back people on light duty, and it happens frequently with these type events. So
I mean, of these 5, don't get specific about which one out of privacy, but I mean, you know, 3 out of 5, 2 out of 5, what do you think came back? Don't specify which one.
I'm pretty sure 4 out of the 5 came back on light duty.
Okay.
I think probably that would tell me without, that maybe didn't have legal involved, but I'd give Jeffrey on that.
All of them work like duty.
Yeah.
Now,
One of them was out for an extended period.
Yeah, there were some, like the 2 big ones, a lot of surgeries involved there, driving that number. So the doctor's in charge. So if he writes them out, they're out.
They're completely out, but nothing they can do?
Yeah, yes, sir. So if that happens, our hands are tied on light duty, which, as Jarrett said, can come back and bite you if you were paying them to be out. And then all of a sudden, you think that they're gonna be okay, then the doctor says surgery, they've gotta be out 4 to 6 weeks. Well, now it's an indemnity claim anyway, and we paid them for 6 weeks. I mean, it's hit or miss, but anytime we can get somebody back light duty, we always get them.
And even if that light duty is extremely limited.
Yes.
Yeah, I mean, they gotta follow, there's restrictions given by the doctor, they gotta apply to it.
You know, they sit there and they look at.
But hey,
Some of them are desk duty.
if you offer light duty and they don't comply, guess what? Those indemnity benefits are cut off. That those switch run.
Well, I'll offer this. There's not a financial solution to change those numbers. And I'm speaking from experience. One organization I work with, I had more than 300 employees. And the worst year we had in the 3 years I had that role was 1 medical attention that was minor. It was first aid. 300 employees in 3 years.
Pretty good.
The next year, I had 800 employees and had a few more incidents than that. So it's a cultural issue, folks. We're looking at numbers, and it's important for us to understand where we can mitigate our cost and our risk. And we mitigate the risk through passing that on to an insurance carrier, but we can't mitigate all of it. The rest of it is cultural, and that's where it comes down to accountability and culture. So I would submit to the rest of you is that you can't beat the numbers up. You got to change the culture. You got to change the performance. And that's where those numbers will get back in line, and this discussion will go to about 1 minute.
Yeah, I mean, my job is to buy your insurance, right? And it sure does help me when I have better years. I mean, just being frank, that I can go out and get more people entertained at the party. And kind of this year, the scenario is, I don't really think we need to engage other carriers and ask for quotes. We've got a good number with some scheduled credit back from National Liability and Fire. And those numbers I referenced up above, they'll see the $600,000 loss. And I just don't think it's gonna show well.
Well, I'm ready to make a motion if you're ready to hear one.
Chair will entertain a motion.
I'll move that the finance committee recommends to the full commission that we approve the above listed items.
That's wrong.
I flipped the wrong page.
I don't think there is a memo, just approve the
All right.
renewal of the,
So I'm gonna make a motion that the finance committee recommends to the full committee that we, approve the, renewal of the workers' compensation insurance with Turner and Associates.
In the amount of, should we put the amount?
as presented.
$24,339.
There we go. I'll second the motion.
Any questions or further
I do have a
discussion?
few other questions, not necessarily about the bridges, but just about what you
please.
just said. Do we have cameras in these cars? I mean, not cameras, do we have cameras, but, we got a lot of cars on the road, we have, like GPSs in the cars that tell us how fast people are going?
Yes,
Monitor those stuff? I mean, are we looking at that specifically to make sure people are following the policy regularly?
yes.
Yeah, there's programs that'll email you.
Yeah, we actually have Verizon GPS, and they send email alerts when
How are
somebody.
we doing there? I mean, who manages that?
Fleet manager is the one responsible for that, and he contacts the superintendents when there's noticeable issues.
And I will say, document that stuff, because the auto, and we're not involved with auto insurance here, but it is Charlie will probably tell you, it is a really disastrous role right now in how auto is performing. I mean, think about here, 17 head-on collision a month and a half ago where there was a fatality. I had a client flip a dumpster, a rolling roll-off truck last Monday, and he saved lives by avoiding, and we saw the dash cameras, it was a miracle. But when the GPS stuff's involved and a bad claim exists, that data is gonna be pulled by an attorney suing us. So we make sure, if we're documenting, we're taking care of notifying and disciplining from that process, because if we're not, it can make us look even more negative. Am I right?
Well, that's exactly what I'm asking is, if we have those GPS stuff, who's reviewing that? And what are our thresholds, not that we wanna be punitive about it, but what is our corrective action policy surrounding that? I think somebody from the staff side needs to take a deep dive into that and look at that process.
Yes, sir.
Maybe with Charlie's guidance, but make sure that we're, that we understand what the limits are, and understand the speed limits, and that we're having somebody who's monitoring that, looking at it, and holding people accountable for it. And also, I see people all the time, and I'm not gonna say that I've never been guilty myself, but on the phone while they're driving.
Well, and that's a good point. So, and I don't know if you deal with this on your side, but we do a lot of construction guys that use the phones, but a handheld citation right now in the insurance market typically is viewed like a DUI, open container. It causes driver exclusions. So making sure that your employees are aware that they shouldn't be on it.
Right.
Because we've got guys that are hired to drive that can't drive because they've been on the phone and got caught with it. So it is now in the NVR, motor vehicle records and stuff, that is viewed almost like a DUI.
And we have a policy against cell phone use in vehicles.
How are we monitoring that? Whether it be
Yeah.
Well, one of the ways it's monitored, again, speaking from experience, is through ride-alongs and observations. I get where you're going there. And I've seen work very, very well is strong supervisor engagement. So, again, there's lots of suggestions there for our exec to consider to move along to improve our
Our two
performance.
biggest, to the point, are auto, or actually, I misread that. One of
Yep.
them's auto, and the next one's below the auto thing, it's just a line below. But, we got two big auto ones up there. I mean, it makes sense to me, a little investment in dash cams and maybe some.
Well, on that one, we may not be at fault. I don't know the exact specifics.
Here's the 85, no, we
Yeah.
were not at fault on
So
that.
this is gonna be more one that Zenith will push for subrogation. And that number, if we retrieve those funds, it goes off your experience mod worksheet, so it could have but still, if they're carrying minimum limits, I don't know the exact on this case.
And if I may speak, that one was a litigated claim. So the actual injury was not anywhere half probably of that number, and then the litigation was the rest.
I'll plan on going over the same information tomorrow for the full commission.
Probably abbreviated, but yeah.
We have a motion on the floor and a second. I'll call for the vote. All
Okay.
in favor? Passes 3-0. Thank you very much.
Thank you, guys.
Thank you. Okay, item 3, surplus inventory and equipment. Andrew, you can give us a highlight on that?
Yes, sir. So we're recommending surplusing 3 vehicles that we've had replaced recently. Admin 114 is a Chevy Spark. High mileage and repairs exceed the value of the vehicle. And 2 vehicles from water distribution that have high mileage and need extensive engine repairs and or replacements. They've all been replaced with existing vehicles that have been ordered, and so we're recommending declaring these as surplus. And then, of course, we'll put these out on Gov Deals to see if anybody wants to take them off our hands or if we'll salvage them.
Chair will entertain a motion.
I'll move that the finance committee recommend the full committee to the full commission that we approve the above listed items as surplus to be disposed of in a manner most beneficial to BGJWSC.
I'll second the motion.
Okay, just one question or clarification is, these vehicles have already been planned to be replaced and already have been on the receipt of other vehicles. So this has been in the program to deal with this, and we knew that on the back end, we'd be retiring this equipment in any case. So it's not something new that's come up to us, so.
Will you put mileage just out of curiosity?
Sure.
Yeah, right now, high mileage don't mean too much.
High mileage for on the distribution trucks, I'm guessing over 175, 200,000 miles.
That's pretty typical, because some of these, like a F-450, depending on what your program is, they can go really between 200,000 and 300,000 is typical for those kinds of vehicles. So usually when they get to the quote high mileage for that class, it's at the end of life. Other questions or comments? All right, hearing none, all those in favor? Pass. All right, it passes 3-0. Thank you very much. And we'll go to the intergovernmental agreement. This one, just as a highlight, it passed in the Facilities Committee on the last meeting. Andrew, up to you to give the, or
Yes, sir.
Charlie, one of you give us the update on.
Yeah, so Glynn County has agreed to provide us with $4 million of their American Rescue Plan Act funding. As part of that agreement earlier, we are required to pay for the water and sewer portions of the Village Drainage Improvement Phase 2 project. Glynn County bid out the work and got back the results. Low bid is from Allen Owens Construction. Total cost for the water and sewer improvements of that project are $217,324.80. This IGA just simply allows us to, Glynn County to bill us for those funds and us to provide those back to them as the work is completed. So Glynn County will be at the contract holder, and we'll pay Glynn County, not the contractor directly.
Okay, Chair, we'll entertain a motion.
All right, I'll move that the Brunswick-Glynn Joint Water and Sewer Commission Finance Committee forward to the full commission the memorandum of understanding with Glynn County regarding financing of water and sewer improvements for the Village Drainage Improvement Phase 2 with JWSC ARPA funds with the recommendation to approve the same.
Questions or comments?
Is this phase 2 of 2, 2 of 3?
2 of 3 is my understanding.
Just curious, what was that?
Phase 1 only cost us about 50 grand. So we're going back, this is behind the village on Butler and Lord Avenue, so they're gonna be tearing up those streets, so we're gonna replace lines so we don't have to pay for
So
asphalt.
this is not just that one row of village?
No, it's
Okay.
back in that whole
That makes a lot of sense.
south end area.
Other questions? Hearing none, all those in favor? It passes 3-0. Thank you. And then the paving services for Rose Cottage Lane, this was heard in the Facilities Committee, and Andrew, you want to give the
Yes, sir.
highlight?
So, the Facilities Committee, we had a lot of discussion here. This project would be to replace some asphalt in Hamilton Landing along Rose Cottage Lane that runs along the force main from Pump Station 2030. Considerable discussion in the Facilities Committee, given that it's 6 years old, whether Joint Water and Sewer should be the one doing this. I believe it was voted down at the Facilities Committee, and we're gonna bring back more information tomorrow for the full commission to consider whether we should move forward with this or not.
So the chair will entertain a motion to move this to discussion.
All right, I'll move that the Finance Committee recommend that the full commission award a contract in the amount of $82,750 to J. Hires Company, Inc. for the paving of Rose Cottage Lane.
In the interest of, if you say facilities did not move it forward,
Correct.
I hate for one committee to move it forward and the other committee not move it forward.
Well, no, it was moved forward, but not with the recommendation.
It wasn't
of approval.
recommended for
We-
approval to borrow.
Yeah, we voted not to recommend it.
But didn't you vote to recommend it just then?
Yes.
Well, I just read this motion, but,
Yeah, so he voted to recommend, that's what we did at the Facilities Committee, we just voted against recommending.
Okay, my point is, if one committee saying I don't want to recommend, the other committee saying I do want to recommend, to me, that's.
Right, so if we
Right.
don't wanna recommend from this committee, then we vote to deny the motion.
I'm missing.
Vote against it.
Yes.
Sorry.
Vote against
Vote
the
against.
motion.
Well, that's
Vote
why I had a
against.
second motion, so that's why I was asking.
Yeah, Robert's Rules of Order directs us generally is if we want to move to discussion of an item that we have to have a motion and a second, then we can have discussion, and then we can choose to vote against the motion or to sustain the motion. Referring back, Commissioner, to the first meeting we had facilities, is I was the one that raised an objection about this because I was not comfortable with the means of inspection of the road compared to the county standard for repair. And so our exec said that what they would do is try to acquire that information in preparation for the full commission meeting tomorrow. And so at the facilities committee, we turned the motion down, is what we did there. So to move this to discussion in the finance committee, we'll need a second if there would be one. So I'll ask,
Move this to discussion.
yeah, in general, if we
Voting
want
to
to.
open the discussion. Second it so
open-
we can open the discussion on the item.
Well, I mean, if that's what, if you want a second so we can talk about it, I'll second.
Okay. Now, comments and questions.
You want me to say the same thing I said before, thing, or is that?
No, anything you want,
I
offer.
mean, I'm good, I mean, that's all I was gonna say, is if one committee's turning it down, doesn't make sense to me for the
Right.
second committee. to forward.
I did not support it because of the
I
reasons.
got the same concerns, that's why I was.
Yeah,
Right.
is that I want to know that our inspection of the facilities out there, the paving, that suggests that it needs to be repaved, follows along with the standard of the county for such repairs.
Because
So-
our original repair was like more than 6 years ago on this.
No, force main was installed more than 6 years ago.
More than 6, yeah, and that's when where we paved over then. So there may be some other factors involved that not because of our work.
Yeah, so if based on our specific inspection, if it meets the standard, the written standard that the county has for road repaving, then I would support that tomorrow, but I haven't seen that. And based on the photographs we saw this morning, I have some doubts. So other comments or questions about this item?
No.
Okay, with that, the motion is that we would we'll move this to the full commission with a recommendation for consideration. That was done in the last meeting. Basically, it failed. It will still go to the commission to review tomorrow because it's on the approval agenda.
But
So,
without a recommendation from either one of our committees.
so far, without a
Well,
recommendation from
if we
facilities.
decide that, yes.
So I'll call for a vote now from this committee is do we endorse this motion or do we not? So all those in favor, raise your hand, right hand. All right, all those opposed, same sign. Okay, it fails here. So tomorrow it'll be heard as at the full commission without a recommendation from either committee.
So, from that perspective, just in general, if neither committee wants to push something forward, does it come off the agenda, or things just go on the agenda?
Well, you can make a motion to put it on the agenda
Tomorrow morning, or tomorrow afternoon to start the meeting, correct?
today.
I mean, what's the point in us making a motion to put something on the agenda if it goes on the agenda anyhow?
Well,
think
it's on
Andrew was-
there
I think
so
that-
that we make notification to the public as to what the agenda items are going to be discussed, so the public can be prepared to engage if they choose to.
Well, so to that end, should this be a week before? I mean, should these, I mean, just from a, just typical little business statement, should these be a week before so that we actually, these committees set the agenda versus?
Well, the chairman is responsible for setting the agenda.
And I thought Andrew was gonna check with the county
I'm
on
gonna
some
check with the
things.
county this afternoon.
To
and if
give
we
us
don't-
some more information, more background
If we can't get the information
to-
for tomorrow, we'll
Right.
vote to remove it from the agenda tomorrow.
But to answer your question, yeah, we've always known that we're voting for a recommendation.
Right, yeah.
It's gonna already be on the agenda, but with the recommendation, from this committee to the full commission.
Right, so tomorrow we'll say that neither one of the committees
Yeah.
recommended this, that
And I'm
we
just
voted.
asking, just to make sure, we're
Yeah.
making, our process makes sense, right?
Right,
I don't say
yeah.
this is the way me, so this don't think it is, but that it makes sense.
Right.
'Cause I know in the past, we've had some things that we recommended to go forward, and the next day, we said, well, hey, we're gonna pull them.
Right.
On the way, we voted, you know.
Well, it's really, they're going forward regardless, like you said. It's
Right,
just
so
whether
why
we have a
would it-
recommendation for approval.
So that's I guess my exact point is, why are we even having votes at this meeting? Why don't we just have discussion, right, maybe get the questions open? What's the point of voting at this meeting?
Because we do a deeper dive at these meetings with the
Right.
smaller groups.
Right, I'm not saying we're not in discussion, but why have to vote?
But
So
I
if there's
think
a
our
rec-
colleagues that aren't here at these meetings would, appreciate the fact that we've endorsed something, that we've spent time on it.
You're really voting on whether to recommend approval, recommend to the full commission for approval.
Okay.
Because it's going forward either way.
All right. That's one question.
Okay. Item 6, gift cards. Dave?
Good afternoon. Sorry.
That was just a test, right?
For some years now, the Joint Water and Sewer Commission has given gift cards at Christmas to its employees, and this has been and is a budgeted expense. This year, the gift cards would be $50 gift cards to Walmart, and we would be distributing those to approximately 140 employees for a total cost of $7,000. This distribution would occur in conjunction with the December 2nd payroll. At this time, we are asking the committee to basically recommend to the full committee, to the full commission, to approve the providing of these gift cards to our employees.
Okay.
I'll make a motion that the finance committee recommends to the full commission, review and approve providing employees with a gift card amount of $50 for Walmart. Total number of cards will be 140 for a cost of $7,000.
I'll second the motion.
Other comments, questions?
Yeah, I'm just thinking that these gift cards probably equate to a holiday meal for our employees and their families. And my concern is that you don't get many groceries with $50 compared to what you did a year ago. And maybe we should have some consideration to increasing the amount so that people can buy 100% of their dinner rather than
Well,
75% of
To
their
that
dinner.
point, last year and previous years,
Well, I
it
know.
had been $25. Last
Right.
year, we, commission graciously voted to bump it to 50, so that's why we came back with the 50 again this year.
Right, I understand that. And then, of course, we couldn't have anticipated the cost of food. And like I say, I'm sure that many people buy their holiday dinners with this. And I think it might be a nice gesture for our employees. They're not contractors, they're employees, and they're important to us. So I think that would be a nice thing to do.
So are you amending the motion?
I'd like to, if it's, yeah. Well, I didn't make the motion, so I don't think I can amend it. You have,
Well, here,
You can make a motion to amend the motion.
so,
you can.
I didn't know if that's what you were doing or not.
I don't know.
So we have a motion and a second for, as it's stated, for $50. Is there other discussion or,
I had a few questions.
okay, please?
Just a few things. So I know we're doing Walmart, which makes sense, but, cause Walmart's got everything, they can use what they want, but, I mean, if we're giving this kind of volume at Walmart, it seems like they would say, you know what, we're gonna give you a 4% discount or whatever on the cards. I know other organizations do that, but, it's, I mean, it doesn't minimize the benefit to the employee, they still get the full value of the 50, but it devalues what we're paying. I mean, it's less what we're paying. If you approach them and say, hey, we're giving you a check for $7,000, we wanna give you a check for $6,800, for $7 of the value. I mean, you go to Sam's and buy gift cards for things around here. I mean, buy them right off the shelf at Sam's and they'll be, a $75 gift card, you buy it for, 68 or whatever. It's got a small benefit to it. So I just wanna make sure we're exploring and getting the best value we can possibly on these. And if not, then maybe Walmart's not the right thing. Maybe we might as well just do it as a Visa card. And that way people can use it wherever they want if we're not getting a discount. The other thing is, do we use a credit card to pay for a lot of our bills and stuff?
Not for most of our bills. We have not instituted purchase cards yet. For this purchase, we will be using the credit card, is that correct?
We have in the past, we've done it both ways, we've done checks and credit cards.
I don't mean for this, I mean in general.
No, the overwhelming majority of our payments are made through check.
Okay.
Or EFTs.
So just a thought, I know other organizations that'll, make a lot of their transactions via credit card, and then they accumulate a lot of points and use points to do things like this. So they're able to pass along.
2 or 3 years we had used the credit card for that.
I don't
Yeah,
mean for
yeah,
this, I
yeah,
mean like when you're
yes,
paying,
to your
when you're
point.
buying a new Ford truck, you put it on a credit card, and then you accumulate points, and then you pass that along to your team members through these
Yeah, that's something we are looking at implementing here. We've been talking about that for a couple of years now, getting purchase cards implemented. We're trying to wait on Dave to get here to get that started for us.
And we're in the process of starting our RFP for banking, merchant services, and investment services right now, and P cards are possibly a part of that.
And you know, to that end, BB&T, again, I know other organizations do, BB&T might say, hey, we're gonna, you know, we'll cut you a $50 Visa gift card that got BB&T stamp on it, they're gonna be $47 each, so small amount if you're only
Right.
buying 140, but still an amount.
Every little bit adds up.
Oh, I'd like to make a motion to amend the motion on the floor. To change it to the amount of the gift card to be $50 and the total cost for the, to be $10,300? Yes. $10,500, I'm sorry.
Wait a minute, hang on. $75 is what you're doing?
Yes,
$75. $75 is
$10,500.
$10,500.
that's right, yeah.
Okay, we have a amendment and a second to the amendment. Let's vote on the amendment. So all those in favor, raise your hand. Okay. So this amends the first motion. I don't think we need to take another vote on this. And so the amount is $75 for the card, for a total amount of $10,500. That's the recommendation. It'll go forward to the commission tomorrow. Thank you very much. Last item on the approval list is the on-site employee wellness checks. Andrew?
Yes, sir. For several years, we've been talking about doing wellness checks. We offered them last year. Southeast Georgia Health System will bring their mobile unit to our parking lot, and employees will get the biometric, are able to get a private wellness check at no cost. Results are confidential, mailed to the employee. We only know who attended. We know none of the results. And we, last year, gave away some raffle prizes for those that participated. So we've worked with First Coast Benefits, worked with Southeast Georgia Health System to get this set up for us again. And they have a dollar value per biometric test that is administered, and then they also do the blood test for PSA for men 50 and older. So if everybody participates, which is highly unlikely to occur, our maximum possible outlay is $7,745.
Okay, Chair will entertain a motion.
I'll move that the Finance Committee recommend that the full commission entering into a contract with Southeast Georgia Health Systems for employees' wellness checks for a not-to-exceed amount of $7,745.
Okay, I'll second motion, and with that, offer comments. This is one of the issues that I've pushed for a couple of years to try to encourage this more strongly with our employees, 'cause I think early detection is beneficial, and I'll continue to support that. Other comments?
No, I'm in agreement with you. I think this is a wonderful benefit for
We'll
the
say this is the
employees.
second year we've offered this. Last year, we got about 20% participation. I would expect that to be increased this year, just because people will be more comfortable with the fact that we're not getting their medical information.
Right.
Okay.
What kind of raffle prizes were there? What kind of raffle?
Last year, what we've done, and we're still in discussion, in the previous years for other raffles, we've done televisions. Last year, what we did for the wellness check is we bought a nice Traeger pellet grill and a 2-night stay at the King and Prince Resort. In the off-season, it's a little more cost-effective, and we offer those two things on.
Incentives do well, I think.
That's very true,
Yeah.
very true.
Yeah.
And both individuals that won those raffles seem to be very pleased with the results. I missed out on the trick.
Okay, any other questions or comments? I'll call for the vote. All those in favor? Okay, there's 2 of us and 1 abstention.
Right.
Thank you. Then we have discussion item, financial statement. Ms. Wilson, you're up to bat.
Good afternoon, Commissioners. We have before us the financial statements as of October the 31st, 2022. I would like to state that our audit is complete. We did get notification from Martin and Jenkins today. They had received the publications they needed from GMA, and I think the management representative letter came out needing signatures, so today is,
Sign that before the meeting. We're good to go.
so we're good. So we'll make sure in the next couple of weeks that we get that audit out to the parties that need to receive that and make it available on our website. Okay, on our balance sheet for current assets, we have cash and cash equivalents at almost $6 million. I would like to note that this includes the lease funds for the VAC-ons. The VAC-ons, we're hoping to receive 2 by the end of this month and 2 by the end of next month. So those funds, that 1.5 million, or almost 1.5, will sit there until the invoices come in for us to pay for those. Bond sinking fund, almost 1.7. We will have an interest payment of a little over 400,000 on 12/1. Accounts receivable at 1.6. I would like to note that the allowance for bad debt is at 250. That went up a little bit from last year. We have some outliers on credits and a high account for Coastal Club Comprehensive Agreement, and we're working on getting that resolved, and that will bring that number back in line. So it's just some skewed data for some outliers there. Our SPLOST account, 328,000 sitting there. Most of that is with the Academy Creek Rehab, the engineering that needs to be finished on that, and the part of the retainage is that will make up that 300,000.
So let me expand on that. We've already have these funds committed. We just simply haven't paid invoices not yet received on the final services.
Yeah, the retainage being held on that project is over 500,000, so.
Yeah, and like 200, I believe, of that is committed from the SPLOST account.
Okay. So it's a normal condition that we would be holding these funds until the final acceptance of
Yes.
the facilities.
Correct.
Thank you.
Construction in progress, we're at almost 43 million. We'll get into the project report in a moment. At the bottom, long-term debt, almost 21 million for our GFA loans payable. We did do another draw request. Actually, the paperwork was submitted today for a little over $1 million on our drinking water project. Page 2. Our customer deposits payable sitting at 2.3. We are continuing to do the refund of customer deposits if they meet the qualifying criteria. On to page 3, summary revenue. I have highlighted the sewer, water revenues, debt charges, and admin. We are still using these on the percentage basis, and the percentages for through the month of October, so 4 combined months, we're at 36.18 for sewer. We're using 37.32 for water, 33.8 for debt, and 33.86 for admin fees. And those are bringing those numbers more in a line than doing the monthly allocation of 112. Interest income, still running at a loss there. We are doing the fair market value each month. For the month of October, the unrealized loss was $81,200. We expected that number to drop just a little, or to have a little bit more of a loss. Hopefully we'll soon see that flip around, and that is across all 6 portfolios. I did want to, even though this is summary revenue, I do want to notate the personnel expenses there. We were, on July, we did add the on-call line item to our general ledger. So I just did want to notate that is now being split out. The overtime and on-call are 2 separate line items now. The total together is $241,900 to date. $214 is overtime. $27,800 is on-call.
I will just note on that overtime number, a lot of that is the work that was done during the storm. The employees that work get time and a half for hourly employees that work during the storm. So that is going to skew our overtime totals for the year.
All storms, even if not declared.
If we shut the office down for the storm and we ask people to come in, then they get the time and a half.
So, but through October 31st, that total for on-call and overtime was 241. So only 11.5% of that is on-call.
How do we do with
That's a management issue we deal through.
So how do we do? I mean, just historically, how do we? I mean, there's one thing, there's somebody staying late to do an actual job, and there's somebody that comes in 10 minutes early, clocks in.
Yeah, we don't have chronic issues with people trying to abuse the system on the time clock. We've had issues in the past. We handle those through disciplinary matters, and
So
they seem to correct themselves.
You think it's a very, very minor amount?
Very, very minor amount.
Good.
On personnel expenses, you'll also note that there is a purchase order for almost $2,000. That is the Terry Berry service pins to be awarded at the Christmas luncheon. That invoice has not cycled through to accounts payable yet. Just as a reminder, the Christmas luncheon is December the 7th from 11:30 to 1:30 at Howard Coffin.
Stealing all my good information I was going to give.
Normally, you do this to me. But we'll note on the service pins, we do have 5, 10, 15, 20, and 25-year service pins. We have 4 that are for 20-year and 2 of them that are for 25-year service.
There's been thought that we all had to do a calendar.
Sure. Shoot to you.
The net operating revenue or loss through October is, we're over budget at $85,000. Capital fees through the October, $562,870. So we're still tracking a little more than last year, and last year tracked a little more than the year before. So we're on a good trend there. Page 4, expenses by division. Not a whole lot out of the ordinary going on here. I did highlight wastewater treatment, and it's only because they had the most purchase orders outstanding. And that is the same for systems pumping and maintenance. We're looking at technical services, purchased repairs, chemicals. The operating portion of that is, let's see, I don't know what I got there. On the wastewater, for their 579,000, 437,400 is operating, another 142 is capital purchases. Again, go ahead and trying to plan the work, plan the needs, get purchase orders in. I did not highlight it, but if you'll look below the net operating revenue, you'll see the bad debt expense. We are over budget. Again, it's that outlier there. After this sorts itself out, we should see that number come back down to where it's supposed to be. And I also, my fault, my error, on the interest expense, we are over budget by $100,000. Apparently, I forgot to add the 2021 series bond payments into our budget calculations. So if you take out the 2021 series budget payments or interest payments, we're right in line where we are with the 2017. So that was my fault. If you take that out, we're within pennies of where we're supposed to be. So the fiscal year total for the 2021 bonds is going to be $340,500. So my apologies. That brings us over budget with net revenue before capital fees of $367,700.
That includes encumbrances, though.
Yes.
What's our total annual outflow? I mean, capital, projects, everything. I mean, what do we spend annually?
Last year was somewhere around 53.5 million.
Yeah.
About 33 million for
Operating.
and 20 million for projects.
Okay. On to page 5.
Can I ask something?
Sure.
The allocation for the vehicles, like operating vehicles, like, fuel, is that out to each different one of the divisions?
Yes.
Yes,
Okay, that's done that way, and
it's in their operating budget.
it's in their operating budget. And typically, when we budget that at the beginning of the year, we can't anticipate what the cost of fuel is gonna be. So do we have like a buffer in there, or?
I think,
Yes.
what was it, there was a built-in automatic, because at that point, the expenses were already starting to go up.
Right.
So there was a 5%,
Yeah, I don't
whatever
remember what we
percentage.
used
It was
percently. We-
Not
an
enough for what?
anticipated.
Probably not enough for what we're seeing,
Yeah,
but we
what
tried
we're
to build in a little bit of buffer there.
Okay, yeah. You can't all anticipate everything, so why it's
We do the
called
same thing on power cost, because if Georgia Power wants to change rates, that could be a big hit through the budget, so.
And I think they do.
All right, on to page 5, supplemental schedule of cash balances. Again, the highlighted, the governmental finance, hopefully by the end of December, we'll see that account go away. Otherwise, the investment accounts are highlighted only because I wanted to note that we are doing the fair market value adjustment monthly, and that number reflects the ending balance in the portfolios at the end of each month. Page 6. Again, just the investments. For the Bund trustee reserve, that 15.4 million, I did speak with US Bank today, Mark Hallam, and we are going to start the draw process. We've got that in line as we do a couple of the projects on the project report. Very simple process, but
So that 15.5 million, I mean, I'm sorry, 53.5 million that you said was our total outlay, is any of that bond, that totally separate?
Last year, we did not spend any bond funds.
So last year, 53 million is total operation, capital,
That includes payment for debt service, but not any of the bond funds that we have.
and the reason I ask that, so we spend annually $53 million, round number, whatever. And we've got 50 million, I mean, I'm sorry, 15.5 million in overnight cash. We basically got 120 days of operating expense just sitting in cash.
Yes, sir.
To me, I'd like
Well,
to see
I know you were not here for the last meeting, but we had to record a $2.4 million fair market value loss last year, so that's why we haven't moved any additional funds into that account.
Yeah, Commissioner Stevens, we had a representative from one of our investment companies that suggested that we shouldn't be making investments right now, that the forward trend is negative. And so cash is worth more to hang on to than it is to put it in the market.
30-day treasury bonds.
Yes.
Yes.
That was their recommendation, and also that one of the things we very briefly touched on was simply trying to do hedges, physical hedges, if we chose to buy things in advance, that we would reduce the future cost of
The
them.
only way to make sure that we never have to record a fair market value loss is we have to sell every investment and make sure they matured on like the 28th of the month. Because if you record a fair market value of any US Treasury before it is sold, it always loses money. But it's not gonna lose money. There's no actual loss because we're gonna hold to maturity, but the way we do our accrual accounting, we have to record that.
I just think somebody who knows more about it than me needs to look at that. It just seems
Yeah,
We hashed it out quite a bit, and it wasn't any viable solution except to just hold on to the cash right now.
That's,
We're also beginning a process of cash flow forecasting, which would encompass projects as well as operational expenses, and comparing that to, our investment options, short-term, definitely less than a year, looking at the 4-week treasuries, the 3-month treasuries, et cetera. That
Yes,
process.
certainly don't want to buy something and have to sell it short because we didn't
Right.
project right. I mean,
Exactly.
that's why I didn't
And,
have to.
and of course, as mentioned, the Fed funds rate was another 0.75% increase earlier this month.
Yeah.
The Fed signaled at that time, more increases are to come, but possibly not as high. So we're looking at 0.25 to 0.5% increases going forward. They've not indicated what they expect their terminal rate to be, which basically means how high they're gonna go. A month or two ago, that expectation was around 4.6%. The Fed funds rate is currently at 4. So we're watching all of those different indicators. Some silver lining news for the economy in general, which may help in this whole rate issue, is that CPI Consumer Price Index inflation level came in a little lower than expected, most recently for October at 7.7, down from 8.2 in September. Producer Price Index also came down. It's at a flat 8.9, kind of things, plus other factors, of course, that the Fed looks at to judge the health of our economy. If we kind of keep seeing those improvements, we might see a slowing of these rate increases,
Yeah.
which would put us in a better position to make these investments of free cash. This past month, our fair market value adjustment was another loss of almost $81,200. If we had invested more of our free cash into these short-term treasuries that would not have matured by the time that October ended and we did our financial statements, our fair market value adjustment would have been even greater, thus making our financials look less appealing. Holding as Mr. Burrows said, holding the securities to maturity, we wouldn't be giving up any cash, but we'd probably be answering a lot of questions about why we're seeing more and more significant losses in our interest, income, and expense lines of our financials. So we're walking that tightrope at the moment with the viewpoint as expressed by the Commissioner Duncan from our representatives from Synovus at the last meeting, kind of a cash is king viewpoint, so that we could get into our fixed income securities at the highest possible rate when the rates peak, and we'll see those fair market value adjustments going the other way eventually when rates come down, but that's long term. We're looking mainly for just a stabilization of rates like we've seen in probably 2014, 15, 16, 17, 18, where these fair market value adjustments would basically be insignificant and not have such a visible impact on our financials.
I don't think we're out of the woods yet either, because I know consumer spending was up over 1%, I think 1.3%, which means to the Fed, I think we haven't put on the brakes enough. So, we may be seeing additional rate increases, which will, degrade our position that way.
Yeah, we're still at a significant inflation rate, like I said, 7.7 for consumers, and
Right.
heading into the holiday season, you expect spending to
Right.
increase as well.
Right.
So,
So let me clarify, I don't want to be one to drive this, it's just something we've been asking about for years. I just want to make sure somebody is actively looking at it and making decisions.
Yes, sir.
Yes.
And monitoring, looking at it,
I
Yep,
agree.
good point to bring forward. We had our Synovus representative spoke to us last week,
And our representative
month.
from,
cash better than 30 days.
and our representative from Truist came and met with Mr. Owens, and he had a talk, and then, so, sussed all that out.
proceed.
Okay, page number 7. Project report. The top one, the GFA loan interest payments and fees, $173,000. $107,000 of that is the drinking water loan origination fee when we had to do an amendment to it, correct? So just wanted to explain why that shot up a little bit. Current to date for the CW loan, $66,700. The drinking water, a whopping $188 in interest fees. Project 906, the facilities rehab, again, the SPLOST on there is the engineering portion of that. We did receive another payout for that this week, so they're getting close to wrapping that up. Meter replacement projects, we're almost at $4,000 for year-to-date expenses. Dunbar Creek, $632,600, split between the R&R and the bond. Again, we'll decide how we want to do that with doing requisitions, is what U.S. Bank calls their draws there. And it would just simply be, it doesn't matter which project we're spending it on, they only care about a draw number and a dollar amount with the invoices to back that up. I will note, just because I forgot to do it somewhere else, on capital contributions to date, we have recorded $80,000 almost 81,000 in capital contributions. We do have another $184,800 to add, and that is the park at Village. I don't know where that is, but we'll get that in for the month of November. So that will increase our capital contributions. I would like to note at the bottom, for the 46,000 that's highlighted, that is to complete, first let me explain. The total of the cost is cost through June 30th, 2022. The expenditures plus the encumbrances brings to what the total is. The available is the budget minus the total expenses and encumbrances. But when you come down to the bottom, the 46,000, it's the column of the encumbrances and the available. That's what we would need if we had to close the doors today and we had to pay out all of our contracts and purchase orders on this. We would be required to have $46.5 million. Just wanted to explain that portion of that. So it'd be the 19.2 and the 27.2. And also a note on page 8, this worksheet reflects, there's a timing issue. The worksheet reflects if you get a pay app, it is processed and assumed to be paid all at the same time. So when you're looking at the numbers, when we record the Ruby Collins for October the 31st, it may not be recorded till tomorrow. We'll have the effective date of the 31st, and it will reflect on this pay app that we incurred the expense and paid it on the 31st. So there's, just bear in mind, there's a timing issue in the flow of cash on the spreadsheet.
Yeah, so it would be like posted on the 1st as opposed to the 31st, or it doesn't reflect that until after?
It goes by the effective date, not the process or the posting or the pay date.
Okay, all right. So,
Any questions, comments?
Anything else?
no,
Thank you, Francis.
thank you much.
Okay, then our final item is the executive session on our agenda, and I'll entertain a motion to move to executive session for the discussion of personnel.
So moved.
Second, all in favor?
Second.
Okay.